All right, welcome to the journey. I was gonna say something cheesy like making money with SoCar. I'm gonna probably want a better tagline than that though. So what we have today is this really big, messy, noisy chart of stuff, and this one here is the 15-minute chart. You got 15 minutes. There's my daily chart, and then of course the 1 hour chart. These are candlesticks. You got some lines here and a line there and a bunch of lines everywhere. Fairly confusing to new people, but we'll talk about what I was looking at earlier this morning, and then we'll talk about why I'm not currently in the market. I was looking at 9 o'clock right here on this little bar right here, Vegas time, so that's local for me. The trading time in New York would make that noon. So we've got another 4 hours of trade time today. I was looking at this, and right around 39.16, I was thinking about going short. It's a good thing I didn't, because right now I'd be a little underwater. I'm down almost 100. Right here, I would have been down $100. So it's not a huge loss, but the market is going against me. The reason I did not get into the market is because of that little blue line right there, and that little purple line right there. They're really close to each other. That's because we're kind of in a channel here, which means we're trading sideways. And I don't want to get into the market when we're in that tight of a channel, because the probability is pretty high that it's going to turn against me a little bit. And I'm down $75 right now. I mean, I would be. So, again, it's not a huge loss, but I would still be in the red for the day. And that's why we're waiting. But I am going to watch the market and see what happens. So, what we're going to do is, and this is the S&P 500, by the way. So I'm going to open a new window, and then of course I'm going to drop a disclaimer about in order to provide financial advice, I must be certified with the SEC. I'm not, therefore I cannot legally provide you with any trading advice, and anything I say should just be fun and a learning tool, and that's it. So don't go out and make a bunch of trades based on anything that I say. All right, so let's see here. I want a new chart. That's this. So I'm using the Tradovate platform, which is a futures platform specific. And let's see here. Let's get a new chart. I just clicked instead of dragged so that this chart is going to be in its own little window. I need to make sure that it's showing up though in OBS in the video. Let's see here. Where's my OBS? There it is. It is not showing up. Okay, so let's see here. I want what? Oh, it's just plain not showing up. Okay. And I can't even select it. Why can't I select it? All right, so mental note, let's figure that out at some point because it would be a lot easier to, yes, let's close that. It'd be a lot easier to have a single chart. Okay, so for now, I think we are going to, let's see here, dark default, new template. Let's do this. Let's say single. Actually, I've already saved the 3 plus DOM. The DOM is depth of market. That's this thing over here on the side. Let's close everything out. Close. Yes, I would love to do that. And this. Yep, I would love to do that too. See, there's that single chart. That looks good. Actually, you know what? We're going to leave that there. And then let's save this as single chart. Save. Now, theoretically, I should be able to bounce back and forth. Oh, why? Why would you do that? Okay, we're going to have to fix that. Okay, so back to single chart. Why is that open now? Yes, close it again. All right, so let's get rid of some stuff. Indicators. Toss it. Toss it. I am going to leave that. Actually, I should be able to just plug it right back in, right? Wherever it's at. Volume, oscillators. And then the regular VWAP. I think we're going to leave, moving averages maybe. Yeah, that's it. That's a triangular. Okay, so since I found it, we can delete it. Let's get rid of it. Bye-bye. Okay, so this is just plain the chart. We got our candlesticks here, we got the volume down here, and that's it. The red and green lines, I don't even know what those are. It's not listed in my stuff here. That's interesting. Oh, that's the high and the low for the day. Okay, so well for the chart, and it's more than just today. Oh wait, it wouldn't be for the chart because otherwise it would be up there. So that is going to be for today. Yep, yep. Yay, we figured it out. Okay, so the high for today was 39.35. The low for today was 39 or 38.91.50. Oh my goodness, I can talk. All right, so that's what those lines are. Here we are. We have these candlesticks just floating around everywhere. I would have been short at 3916. So right in here, right there is where I would have potentially shorted it. And again, it's a good thing I didn't because wow, it's like $200 against me now. So let's take a look at the indicators that I'm currently looking at and why I like them. So what we're going to do is, and this will be different in each trading platform, but this is Tradovate, and in Tradovate we want to say the indicators. You want to click on this, and then I'm going to click back. I would love to have a couple of things. This paid to fade here is the anchored VWAP, and this is a volume weighted average price. And then the anchored means that I can specify where it begins. A normal VWAP is just for that trading day. So the first, it would be anchored to this little 630 pen right here because this is the opening candlestick. 6:30 a.m. for me is 9:30 a.m. New York time. That's when the market opens. The market is open 9:30 to 4. So that's the opening bar, and the VWAP would automatically be on this. I'm actually going to do two because I want to see how tight this channel is. But when we do an anchored VWAP, we can specify where we want to begin. It's not automatically the beginning of the day. So I'm going to do the day begin here. I'm going to do the low point of the day, which is right here. So if you look down at the bottom right here in this area, it's going to have the date and time. So I'm going to anchor my bar, my indicator here to January 10th, which is today, and I'm going to anchor it to 7:45 a.m. So we're going to click on indicators, paid to fade, and that the anchored VWAP was not included in Tradovate's platform. Somebody went in and coded it, and paid to fade is what they called it. I don't think that's the name of their channel. Their channel on YouTube is one of the channels that I watch, but I can't remember whose channel it is because I watch a lot of trading stuff. This is what I do when I'm driving a forklift at night. So for now, we're going to get rid of the upper and lower bands. We're just going to look at this line, and that's it. So 2023 here. It's January. We want the 10th because we're looking at today. The hour was 8, and I think the minutes were 30. That seems right. We can always change it if that's not right. So the 8:30 candle for today. Cool. And then I'm going to say save. And now we have a little blue line right here. And that's it. So right now, the volume weighted average price, the price is trading above that line. So today, or at least during this trend here, is a very up day, and I am way losing money right now. Had I been in, oh wow, I'm not even on the chart. I'm way down here. So had I just bought it and sat on it, this candle here would be whooping me right now. So let's also add in, I want one of my moving averages. We're going to use the triangular. Why is it not purple? There we go. So those are so close to each other. This is going to start diverging a little bit because of this massive candle right here. I would expect this current uptrend to continue. Overall for the day, we're in an uptrend. So some of the rules are you don't want to make trades against the trend, meaning for today, which began right here, overall it's an uptrend. So I would be looking for long trades or trades where I'm buying the market on this side instead of trying to sell the market on this side. And I probably wouldn't want to get in right here, so I'm not going to go long the market right now. I'm just going to watch this and see how it plays out. But when I'm looking at my VWAP, I'm looking at, or my anchored VWAP, I'm watching this line, and it's going to trade mostly above the line, or it's going to trade mostly below the line. Let's actually back this up to this low point right here. So that's today at 5:30. So I'm going to say configure chart elements, and there is my anchored VWAP. And we're going to change this to 5:30 my time. Save. Okay, so now it starts back here at this low point. And wow, look at the crash. And then immediately came right back up. And same thing with this. That's got some pretty heavy, fast swings. Got a really big, strong swing up, strong swing right back down, and then kept going down and then right back up. So I would anticipate after this one, we would actually see another candle that would be red, and it will probably come back down toward that the blue line. So this blue line is going to act as both support and resistance depending on where it's at, meaning the support line is the line that's underneath the trading, the price action of the market. So when the trades are going on above it, it will oftentimes come down to the line and then bounce back up. That's support. In this case, they're just trading wildly on both sides, which is why I'm not even in the market right now. And then when the market tends to be trading below that line, it's going to act as resistance. And resistance is you draw your trend line wherever it's at, and the price action is going to come up against the line and then bounce off and go back down. That's resistance. So one of the strategies that I have been watching for this market, for the S&P 500, is to identify where we're at with the anchored VWAP here, and then if it's solidly above or below, then trade in that direction. So we're mostly above right now. Like the bottom of this candle is right there on the VWAP. The bottom of this candle right on the VWAP. Bottom of this candle right on the VWAP, and then everything's all over the place from there. And even the wick itself is just barely below right here. So for the rest of the day, it could very easily just stay above the VWAP, but we're not trading it right now. So one of the strategies I've been watching is to be on the correct side of the VWAP and then get into the trade as it gets close to or bounces off of. So if this comes down and touches the VWAP and then bounces off, then I'll go long in the market and then ride it up. And the purple line here, your triangular moving average, I would stay in the trade until it crosses that line, which obviously today I can't do any of that, which is why I'm not in the market. So let's back this out a little bit. Let's look at a bigger time frame. So generally speaking, the larger time frame, I don't want that. Wait, that is what I want. No, it isn't. Where do I change my time frame? I swear that's where it was. Right there? No, that's my color of my chart. ES is the E-mini S&P 500. H is the code for March, and then 3 is the code for this year. So M is June, U then would be September, Z is December. So you got quarterly contracts. You have contracts that expire every 3 months on this. That's where I'm at. Why can't I change my time? Oh wait, that's going to be right here. Settings. That's not right there. Oh yeah, I can set up my brackets too. So setting up a bracket, let's take a look at that. Why not? Properties, there we go. So you can set your take profit point, your stop loss point, meaning if I jump in the market right now at 39.23, I can say, let's set a stop loss of 2. And I can change that either from ticks or to the value. Value here is 2 points. So what did I say, 39.23? Oh, look, it's the red bar that we were guessing. And this will probably come back down until it touches either the purple line or the blue line here. But it could very easily go long too, which is why I'm not trading it just yet. At any rate, the value is the number of points. So if I got in at 39.23, for instance, and this is set to, that's $25. That's not the points. Delta price. Yeah, that's gonna be the yeah. So delta price is gonna be the numbers 39.23 up to 39.24. That's gonna be a single one in delta price. So point 0.5 would be 39.23 down to 39.22.5, right where it's at now. So the ticks, because the tick is and a quarter. So this is 0.25, 0.50, 0.75, or straight up 0.0 like it is there. That's a tick. Each tick is worth $12.50 on this contract because each point, 23 down to 22 down to 21, etc. Each point is worth $50. It's $50 per point. So this is how you set up your stop loss. This is saying if the market goes $50 against me, just exit the trade, get out. This is also saying if it goes $50 in my favor, exit the trade, collect that $50, take my profit, be happy with the fact that I got my $2, and move on to the next trade. So that's what your take profit is. That's what your stop loss is. And in the beginning, at the least, when I'm watching the market like I'm doing now, I'm actually going to be paying attention to the numbers here. I'm going to watch it, and I will take my profit manually. So I'll exit the trade when I feel like I've made some money and the market is starting to turn against me. I'll just go ahead and exit. I'll collect my winnings and be happy about it. But I will have a stop loss. So my stop loss will be a little higher than that. I don't want just 2 ticks because 2 ticks can just blink and you get stopped out. You're out of the trade. You lost your $50. So I would probably set this to be either a full point for $50 or even 2 full points for $100, and that would give me 8 takes. So if I'm in it at 39.23, which is where I pointed at it in the beginning, so I'm basically breaking even at this point. So if I said let's go ahead and go short because it's green, I want a red or whatever. If I said short, then if I set it up for 8 ticks or 2 points, it'll stay in the trade. But if it moves up to 39.25, which is 2 points against me, $100 against me, then it would close the trade. So that's what our bracket is. You can set up your take profit target. You can set up your stop loss, and then just say okay. And then when you click, you can say buy market, sell market. This is if I want to go long. This is if I want to go short. And you're in a trade. And then when it hits one of those 2 price points, it just automatically exits for you. Really nice. This is kind of an indecisive candle, isn't it? Just sort of floating around that one spot. Oh yeah, let's back this up. Oh, I still don't know how to back this up. Why do I not know this? Let's throw up another chart real quick. Let's see here. That one, select, but I want that. Why do I not remember how to do this? It's a good thing I'm doing all this as I'm learning. The first several videos are going to be mostly for me, in all honesty. I'm going to go back and watch them and see where I'm making mistakes and reminding myself what I need to learn, that sort of thing. Oh, I swear I clicked on that. Oh, wait. Where's my... Well, no, because I looked at that already. Oh, right there. I have to hover over the chart and then... Yeah. Oh, my goodness. Whoops. I didn't want to do that. Shrink that back down. Oh, I can do that. Okay, cool. We just figured something out. Let's go ahead and add my other chart back in. Add it here. Yep. And then we'll set up... I want that one again. So it's the same chart. It's all the S&P 500, but we're going to set it up to... Yeah, I click on it right there. I knew I was clicking on the time. So we're going to set this one up to 1 day. This is the daily chart. So that bar right there, let's zoom in a little. I'm just scrolling up on the mouse and then dragging it. That one is today. So yesterday, it went up high and then pushed the price back down. It opened right there. It closed right there. So the daily chart suggests maybe we're looking at more consolidation in this channel here. If I had money floating around, I'd probably pick up a call option in this general area and a put option in this general area, and just wait for it to move in either direction and collect winnings. But actually, I don't think this even shows. Let's see here. Where's my option? There it is. Throw this in here just real quick. Select. See, it doesn't even list options, which is kind of interesting because there are options for futures contracts, and that would mean that there will be options for this futures contract because it is singly the most popular futures contract to be traded, like on any platform. Why is it not closing? Oh, because it's loading. My poor computer is really confused right now. Am I even recording? It thinks I am. Oh, there it goes. Yes, let's close it. Okay, cool. Okay, that's weird. Let's get rid of this. Yep. That'll auto expand that. Let's add the chart back in. Chart here, because why not? All right, cool. That's my daily, so let's change that. Oh, S&P 500, there it is. Daily is correct. This one here, we want to go in a little bit. We're going to change this to 1 hour. I like seeing the different time frames. Oh, look, it still remembers my thingy right here. And that is trading right above. That's the VWAP that we added earlier. Okay, so it shows here. It won't show here because the VWAP is in today. And so the VWAP is only inside that one candle. So the idea of having multiple time frames is you want to get into trades that are good or highly probable across multiple time frames. So this right here, the current candle is trying to be red. It's gray. There it is. Now it's red. This one here is trying to be red. It's trying to go down. But up here, it still shows as being green. That's the hour. So for the hour, it's up. But for the 15 minutes that just started a few minutes ago, we're actually halfway through this bar. Wow, that's going to be a really tight bar. This one here is trying to be red. That one's green. But for the day, we're green, but just barely. It's just a, what do they call this candle? It's got really big shadows or wicks. That's an indecisive candle. I know that because it shows the open and the close is really close. So the bulls aren't in control. The bears aren't in control. Bulls being in control means that you're in an uptrend. The bears being in control means that you're in a downtrend. Neither of them are really in power right now. They're kind of fighting back and forth, and we're just sort of floating. The smaller time frame, this is the 15-minute chart, and this is probably where I'll be doing most of my actual trades. The smaller one shows you the better entry points. You can figure out, okay, I want to get in this at 39.14, or I want to get into it at 39.20.25, or whatever. It shows you your entry points. The bigger one shows you your more overall trend. Like the trend right now, overall, we're in a channel. I mean, that's, oh, I can't. Let's get a drag. Where's my drawing tools? Let's make a box. Where's a box? There's no box. Oh, shapes. Rectangle. So I would say that we're looking at a channel about, really? Rectangle. Why are you not drawing? Oh, here we go. No, that's not what I want. I said rectangle. I know I did. Do I right click? No, that still drags. That's interesting. Okay, so I'm gonna have to figure out how to draw a box. Basically, though, we're looking at we're in a channel from that point there down to that point there. So we're gonna see a lot of sideways stuff in that range. If you're in a channel, there's a couple of things you can do. You can buy your call option just outside on the top. You can buy your put option just outside on the bottom, and wait for price to break out. Is that a straddle or a strangle? I'm pretty sure that one's a straddle, is what they call that option strategy. And then another option is if your top of the channel is really there, and actually I'd probably draw it right in this area here, and then the bottom is down there. You could buy anything down in this area, the 10 to 20% of whatever that range is, and then sell up here, wherever the 80, 90% range or of that range would be. That's not really what I'm doing. I'm looking for more swing trade stuff. I want to catch when it starts to come down from this point and short the market until it starts to cross back up. So depending on where the VWAP was here, the VWAP probably would have been floating in this general area. You know what? Let's look at it. Let's take a look. Let's see what my rule says. Indicators. Oh wait. Where would we want to put that? Let's put it at this low point right there, just out of curiosity. Actually, we really should put it here because you want the lowest swing low. The swings are where you're going up and down. So swing low, swing high, swing low, swing high, swing low, swing high. That's the swing. So let's go ahead and set it right here. So that's 5 a.m. on 106. 5 a.m. 106. Indicators. Let's go for paid to fade. Get rid of the bands for now. 2023. January 6th? I think it was the 6th. I don't remember what time. Okay, so let's say save. January 6th, yes, but we're going at 5 a.m. So I want that candle. So let's say configure. That's the 10th, that's the 6th. So I have two different VWAP lines. You got the two little blue lines right there. And actually, we're going to change that one too. So for now, let's change that. Where do I want it to be? I want it 5 a.m. at 1/6. Okay, so let's change that. 5 a.m. on January 6th. Yep. Okay, there it is. So now this VWAP line is starting here, this swing low point where it turned around and started the uptrend. And we're watching to see where it comes into play here. So if I were trading this yesterday and riding it through, I would have gone short right in here, and I would have waited for it to cross the purple line right here and got back out, which means realistically 39.11, probably right in here. I probably would have broken even on that trade because it's just a straight across. I might have lost $50 or maybe even 100. Probably not. I probably realistically, actually, I might have even made just a little bit. Let's not assume I would get in right on the line. I would have got in below it. So 310 maybe. Over here it crossed at 311. So that's $50. I might have lost 100 on that trade if I were just following that rule. So had I taken that one rule, it crossed below the VWAP, get in the trade. When it crosses above your triangular moving average, get back out of the trade. If I would have coded that into a bot, it realistically would have cost me about $100 right here. Let's change this VWAP though, and we're going to go for 8 a.m. on the 9th. So we're going to change this one. We're going to say 8 a.m. on the 9th. I said the 9th. I said the 9th. Okay, there we go. 23rd, January 9, 8 a.m. Save. All right, so this VWAP will show that we're definitely in that downtrend. It kind of is trying to break through, but it's not. It's bouncing off of this, and that's what I mean by this will be a resistance. So this is a good example of a resistance line. Let's maximize this. There we go. We can see much better now. Let me make sure that's actually showing in the video. Yep, looks good. All right, so it'll break through, but then it comes right back down. And it's almost there, but it's not, but it stays down. That is an actual touch, and then just a tiny, like maybe one tick above, and then it comes back down. And actually, it's staying above this one and below that one. That's a super tight channel. This is a perfect time to be getting into a straddle position. Get a call option right here, put option right here. Downside is my account is a small account. I've got 600 bucks in here, which means I realistically don't have the money to buy either of those options. I definitely don't have the money to buy both. Now, I could sell a credit spread right here and right here. I might look into that. I mean, we're not going to look into that on this video, but I would like to look into that to see how much that would cost. And if I'm selling a credit spread, it would actually be bringing in some money. I don't know. I think I would buy a credit spread. And what that means is I would buy this one, but then sell this one. The one that I sell is worth less than the one that I buy, so I end up paying money. But because I'm selling that one, I'm locking in my potential profit. I'm capping it, but I'm also making it cheaper for me to enter the market. And then the same thing on the downside. I would actually probably do it right here, just below the purple line, your moving average there. Okay, so here we go. We're almost to the touch. I could almost short this. I mean, not quite, but almost. I could almost short this. I could let it bounce off that line right there and then just hit short and watch it come back down. Because it'll come back down to somewhere in this area, most likely. It could go all the way until it touches the purple. It could easily just break through, too. I mean, that's the thing about channels. When they're this tight, it's super easy for it to break through. Now, volume is important too. Volume is actually really important. And I've seen so many videos from so many people, and they talk both ways around this. Oh, volume doesn't matter. Oh, especially in foreign exchange because you have a bazillion trades anyway. Volume does matter, and the reason it does is because smart money, big money, the institutions, the banks who are out buying a million shares of Apple, whereas you and I would buy one. We'd have to pool our money together to get one pair of or one share of Tesla or something like that. We don't move the market, but they do. You put in a million orders to buy at market, and it'll skyrocket the price, and then they're paying lots of money. So they don't do that. They use algorithms to usually off the VWAP actually, because they have guarantees that they make to their investing clients that we will get you this stock at the VWAP, the volume weighted average price for the day. And then of course, if they have an algorithm that is good enough to buy below that line, then they get to keep the extra money. So they are heavily incentivized to have a good algorithm that will only buy below the line. But the volume shows where the big money is. Smart money, big money, investor money, the non-retail traders, people like you and me, we're retail traders. We don't buy a million shares of anything. Here the volume is dropping, but the price is still moving. Here, that's massive volume, comparatively speaking, for a really big range candle. But I mean, it's gray because it closed out so close to where it opened. It's not even red or green. So that's a very indecisive candle. And I think that the rule for that one is in this situation, it would be a continuation, a trend continuation. So because we're starting this uptrend here, I think theoretically it would want to continue. But we'll talk about all that sort of stuff later. Right now, we're just looking at the anchor to VWAP, and I'm watching the market so I can learn how it moves. It is kind of floating right there next to that, though. Actually, let's shrink that one back down. Let's go back into the 15-minute. Let's expand this. Here we are. That one doesn't have both. So for fun, we're going to add a VWAP here. Oh, we already have it. And then we're going to add the VWAP there. That's going to be a 715. This is a different candle because it's 15-minute candles instead of an hour. So 110, that's today, 715 this morning. So 715 today. What am I doing? Right there, okay. I couldn't see it because the screen's big. Paid to fade. All right, there it is. Let's get rid of these for now. 7:30? I think it was 7:30. 7:30, and we're going to go with January 10th, except we're going to do that this year. There it is. This year, this month, that day, 7:30. Stay safe. Wait, what? I wanted this one. Oh, 7:15. My bad. So it's starting from there. So let's change that. In there and yeah, that one. 7:15. Apply. Say what I mean. Okay, there we go. Yeah, there. That VWAP is below that one. That's great. Look at that convergence right there. That's awesome. Yeah, we're not going to trade anytime in the next hour or two. Realistically, we might not even trade today. It is starting to form what looks like a pretty decent uptrend, though. You got your little indecision right here on relatively low volume, and then you were moving up. That's actually a pretty big spread for relatively low volume. We'll see what happens, but it looks like I could almost be safe in going along at this point. But again, that's an almost and a maybe, and this is my live account, so we're not gonna throw money away. We're just here to learn how the markets are trading. Let's say let's get rid of both of those. Okay, and then we can shrink it back down. At any rate, that's and we're gonna get rid of these two. Yes, yes, and yes. Okay. That's a little overview of what I'm doing. This, again, is mostly for me. I will be posting the video because I do have people that are already watching and learning. And so I'm going to have the video posted so that people can learn with me. And they can learn from the successes that I have and then also from the failures, because doing things wrong is the best way to learn. Doing something right, you could just be lucky, you could have guessed right, who knows what. But when you do things wrong and then analyze how you were wrong, that's where we improve. And I've made some pretty crazy gains in the market percentage wise. But we're going to be a little more scientific about it this time, in that we're actually going to document everything. The last run through, I got an 1,100% return in a month. It was nice. Turned 2,000 into 26,000 or 20. What? The last screenshot I have was from 26,000, and in that one I was screenshotting all the way through, so you can see the money that I made, you can see the money that I lost, but I wasn't documenting it like I'm doing now. I think I actually closed the account out at 24,000, which is why I'm saying it was an 1,100% gain as opposed to the 1,200 or 1,300 or whatever it was. The last screenshot I've got, though, I think is at 26,000 for the account, and the account started with 2,000. So I do make some good gains, but this time I really want to document everything so that I can learn, so that other people can learn from the process. So thanks for coming along for the ride. This has been the journey with Zokar. Except again, I'm gonna have to come up with something, a little more catchy than that, I think. If you have any suggestions for the catchy opening phrase and closing phrase, by all means, drop it in the comments. We'll take a look at it. Maybe we'll have I was gonna say a user defined, but I guess you're not really users. You're watchers and viewers and participants. Yeah, if you have any ideas for cool catchphrase opening and closing, throw it in the comments. It'll be fun. Thanks for coming. I know this one has been a little long. Realistically, they're probably all going to be around a half an hour videos, just because I don't want to cut anything out. I want to show everything about the thought process, both for myself and for those who are learning. And then, of course, I'll do actual training videos too, and we'll tag those as being training. How to use the MACD or whatever. But these ones here, we'll put them in a playlist. We'll probably call it The Journey until I come up with something better, or one of you helps me to come up with something better. But at any rate, thanks for coming along for the ride. It's been fun. We'll do it again in the near future. Every day that I have time to sit down and watch the market, I will make at least one video. If it looks like I'm going to get into a trade, or if I see something that's spectacular and I do start a trade, I will immediately start recording so that I can document it. I'll show everybody where I got in, why I got in, and all that. So thanks for coming. It's been great. See you in the next one.